Well, good morning, everyone. Welcome back to the channel. So we have some pretty good news this morning to offset what happened yesterday with our reverse split news with Tesla. So let's get right into it. We got pretty good dividends from YMAX and YMAG. So let's look and see what they are. Okay, so here is what we have. We have 31% for YMAX and 25% for YMAG. To be exact, YMAX is 31.12, YMAG is 25.56. As far as distribution per share, YMAX is paying 53, almost 54 cents per share. The X date is tomorrow. The record date is the 16th, and payment date is the 20th. So there's a little bit more of a longer wait time with this one, just because this is the first month. YMAG is paying 43 cents, which is 25.56%. So these are both a little bit higher than our, actually, no, I'm sorry, they were a little bit, I want to say lower than our estimates. I think the video I did last week, I was hypothesizing that we were going to have like a 40% yield, which would have been like a 68-cent dividend. So we're a little bit lower. And then look here, they break down the expense ratio a little bit better. All YieldMax ETFs shown in the table above have a management fee. Okay, so there is acquired fund fees and expense of 0.99%. So that's the base expense ratio. And then there's a management fee of 0.29%, hence the 1.28% total expense ratio. So I like how they explain that. Okay, so let's look at how both of these are doing today. The market has rebounded somewhat from where we were yesterday. So let's look at that. I am going to start using Seeking Alpha more in the very, very near future. But anyway, still, 26% and 31% are still pretty good for dividends, better than what we're accustomed to with some of our regular dividend funds. The headline here, stocks bounce back at the open after the CPI hit. Okay, so let's first look at YMAX. 2090. So how about this? We're up. Even with the dividend announced, we are actually up today. 1.6%. Now let's see. We're ahead of the NAV. There's the expense ratio. 52-week range. We're already up over $1. Okay, so all time. Yeah, 2005 is what it's showing here. We've only been trading like not even a month. So that's pretty good. In our first month, we're already getting a dividend. We're accustomed to waiting like 60 days before a dividend is even declared. So all in all, pretty good there. Let's see if the historical data reflects, probably doesn't yet. No, because it was just announced. It was literally announced like an hour ago. I'm trying to be more on top of this stuff here. And then the YMAG. The YMAG, the YieldMax Magnificent 7 one, is up also. It's up almost 0.8%, 16 cents. Now this one literally just went public on the 29th, so we haven't even been trading hardly 2 weeks. And we're about flat in this one. We were up to 20.59, so not a lot of fluctuation here. It's kind of what you like in a dividend fund. You don't want to have a lot of fluctuation, but you want to have obviously decent yields. Now, one thing I want to go over, a question that's been coming up in my Discord, growth versus income. So income is like dividend income. Income is paid out. So the way this works, not everyone understands this, but on the ex-dividend date, this $20.39, if the price stays the same as of the ex-dividend date, which is tomorrow, just let's assume that the price is going to stay the same. So the dividend for YMAG that we just said is it's 43 cents. So what's going to happen, this price is going to be 43 cents lower because the dividend, which is the income, is factored out. So it's 20.38 right now minus 43 cents, so it would be 19.95, right? So that's how that works. The income is paid out of the fund, and then the fund has to recover the dividend uh, as it hopefully appreciates back in price. Now, growth, right? Growth is, when you're invested in like a long-term growth fund and the fund appreciates in value over time. So obviously you invest to make money. You want a rate of return. Income is a rate of return, but in a lot of these cases, it's being paid out of the fund, and the fund is not necessarily recovering. Um, I know it's like having your cake and eating it too, which sometimes we get, but in a lot of cases within the last 6 months or so, we're not quite recovering when the dividends are paid out. Growth, which I'm a big fan of, long-term growth index funds and stocks, of course. When the price appreciates, you're growing. The fund is growing, your wealth is growing, you're making a return. You don't actually realize that income unless you take it as income. So you can literally pay yourself a dividend. That's the alternative, right? Look at it how like Warren Buffett looks at it. So Berkshire Hathaway, right? They don't pay a dividend, but look how much Berkshire Hathaway grows. So in a sense, it's like they're reinvesting the dividend for you back into the stock itself, and it keeps growing. If you wanted to take some of the growth as income, you would have to sell some shares or some fractional shares, realize a capital gain, and then you would have the money in your hand. Otherwise, you just let it roll. So that's really the difference between growth versus income. And let's see here. Okay, so we've got this one. Let's go back to the website here. We'll look at the underlying of both of them, see how we're doing there. Hope everybody's having a good investing day. At least the market's doing a little bit better today for us than it did yesterday. So, all right, I'm going to share this really quick here. Okay, and of course there's Tesla. Now I've had some questions come up about Tesla about buying back in now. If you want that pre-split price, then yeah, now would be the time to probably load up on more shares so that they can be, cut in half by the 26th. So okay, here are our fund of funds. Here's YMAX. This will be updated today since we got the dividend announced. So keep in mind, so these are not invested in any covered calls, right? These are strictly invested in, oh, here's a JP Morgan something. This must be like for, oh, wait. Okay. This is the AI one. So these are strictly invested in the ETFs. AI, AMD, Amazon, Apple. It's actually, this is in more than I thought. This is more than the Magnificent Seven. Has anyone noticed that on here? The Mag 7 fund is, hold on a second. Am I on the right one? Wait a second. Oh, my apologies. I'm on YMAX. All right, disregard what I said. So AI, AMD, Amazon, Apple, Coinbase, Disney, Meta, Google, JPM, Moderna. It's only showing part of them, so I'd have to like download the whole thing. But anyway, it's got positions in all of them, and the weighting should be relatively equal. Some of them are going to be higher, some of them are going to be lower because of the differences in the way, some of them are going up, some of them are going down. Right. So then YMAG is so these are both fund to fund. So these are not involved in the synthetics like the covered call ones are, but indirectly they are because they're derived from the synthetic positions that are held by all the other ones, right? So in a way, you could almost look at it as like a derivative of a derivative in a sense. And then of course YMAG is here. And let's see what we got. This is going to be, of course, in the Magnificent Seven. There's a cash position here at the bottom. Here's Tesla, Nvidia, Microsoft, Google, Meta, Apple, and Amazon. So there's your Magnificent Seven. And there's the weightings in terms of holdings. So just to be clear, the Magnificent Seven is invested in the YieldMax versions, the covered call ones that exist for each of the Magnificent Seven stocks. There's no like direct exposure to any of the seven stocks. But anyway, all in all, a fairly good dividend payout here. Oh, look who's back on. Welcome. Glad to see you. Oh, look here. 1982, JG 1982. Haven't seen you on in a while. We're getting, like I say, we're really getting the old gang back together here. Welcome, welcome. Uh, okay, so let's see. Yeah, just to recap again, dividends, we've got 31% for YMAX and 25.56% for YMAG. So that's that. Our first dividend is in the books. Welcome. Okay, that's about all I have for you all for this one. Like, comment, and subscribe, and please join the Discord if you haven't already. Let me put the link here. I need to start putting that in every video too. I'll put the Discord link up here real quick. So let me go back here. It's in my, now here's the trick with Discord. So sometimes it takes like 2 times for the link to work. I'm not sure why, but maybe I can have my IT department fix that, which, consists of like, a volunteer. Okay, here is the Discord link in case anyone hasn't joined yet. So please feel free to join. We have a lot of fun in there, a lot of knowledge in there. Like, comment, and subscribe if you haven't already, and we will see you all very soon. Thanks so much. Take care.